The Money Show with Bruce Whitfield is brought to you by ABSA CIB. ABSA is proud to have assisted Infinity Power on delivering on its COP27 promise of being the fastest growing renewable energy company in Africa. ABSA is a registered FSP.
702.
Bruce is on Twitter @BruceBusiness.
Graham Kerner was saying, you can't look at South African companies in the rear-view mirror. You have to look at where they are going. And there's been a fairly significant realignment of the portfolio of Remgro, investment holding company, which is ultimately controlled by Johan Rupert. What's interesting about these results from many South African companies right now is how they are succeeding despite government's very slow reform agenda. Gets to a stage, though, when governments in the environment are not supportive and companies then having to start cutting costs, and that means cutting jobs. And that's coming if we don't pull our finger out in terms of the reforms that are so desperately needed. And it is why it's important that governments speed up actions to improve the business environment. Consumer confidence, of course, as we mentioned in the first half hour of the show today, at its third worst level since 1994. Business confidence is fairly shattered as well. Chief Executive at Remgro is Jannie Durand. He's on the line to us from Joburg this evening. You've been reshaping Remgro quite significantly, Jannie. Good evening.
Good evening, Bruce. Yes, we have. There's quite a few things on the go, so we're quite excited about that, and some things are actually quite close to close, so we're quite excited about that.
What's the thinking behind the way in which you're changing the assets that you hold within Remgro, letting some go, listing some, buying more in?
Yeah, it's all hopefully for the right strategic reasons. The combination of the Stel Heineken that we've got the Comcom approval and the Competition Tribunal approval just last week is exciting. Strategically, you've got a platform that we've got as a world-class platform. You put beer onto that, so you get so many more that your route to market improve. So the combination, we think, is a very compelling investment case. And also into Africa with Heineken countries where Heineken was not represented, that we've got representation, we can take their beer to the market. So we think it's an exciting prospect. The delisting of Mediclinic, that is hopefully will also be concluded soon. We think a hospital group actually operate better in the private environment. And the reason I'm saying that is you can take longer-term decisions. You're not at the volatility of the markets on a daily basis. So you can take longer-term capital investment decisions. And also, you're much more agile in a very changing world. It's much easier to operate in the private environment. So, and then clearly the Vodacom CIVH tie-up deal that we're also in the at the Competition Commission. We think we're going to actually democratize the internet in South Africa, bringing it to the less affluent areas, making it affordable broadband for everybody.
Yeah, there's a huge amount going on, of course, within this environment. Yet, as our market commentator Graham Kerner was saying, and as you are painfully aware, there's still a 40% discount to the intrinsic net asset value. So you've got all of these companies, all of them worth a lot more on their own than they are as part of the group that is Remgro. You constantly are flexing and trying to close that valuation gap, as it's called, yet it seems to be very sticky. Why does the market not put a better value on the assets that you own?
I think it's not just applicable to Remgro. I think it seems to be a worldwide phenomenon across the globe at the moment. We've investigated that, and many of these investment holding companies are trading at a discount. So all that we can do is actually make sure our companies perform, they grow, that we invest the money into the right places that actually deliver growth for our shareholders, and hopefully the market can see that we're making the right decision to actually want to acquire our shares. So we must make our shares attractive to the market that the discount can close. But as you rightly say, it's not us that determines the discount, it's the market. So they're putting that rating on us, and we must make sure the companies perform and that we actually can show them up, to put it that way.
The power crisis absolutely crippling confidence everywhere. Over the last 5 years, you built something called Energy Exchange, and it really has, I think, lifted quite a lot since the license caps on independent power producers were lifted, and it's just coming to the fore right now. You've sold 25% to Rand Merchant Bank. How is Energy Exchange going to change the power game in South Africa?
It creates an alternative asset trading so people can buy and sell on our platform. So what we now can do, we can actually buy power in Mpumalanga and you can sell it in the Western Cape using the Eskom grid. Also, what is quite compelling is we can give price certainty to the consumer because of the increases in Eskom ranges. I mean, they delve into obviously the debt. They need to service debt, coal prices change, and the input costs change. But because we will mainly be trading in green energy, prices are very constant in that. I mean, and obviously nobody can steal wind and sun, so that makes it a lot easier as well to have price certainty on that. So that is the one thing. And what many of the customers that we will sell the electricity actually also want the green energy bit so that they can also fulfill the ESG scorecard. So we think we've got a very compelling business case in that. And we've got our license now, so we will start trading in June as well. And then we will be in the next 6 months, we'll trade more than 100 megawatts of power. So we're very excited about this prospect.
So we start seeing South Africa's energy market into the future operating like the massively complicated and, to me, unfathomable UK market, where the same infrastructure is used, yet you buy your power from one company and maybe next week from another company, and the week after that from another company. Are we headed to that kind of future?
I think we are probably more and more to that. Obviously, it's a bit more difficult. I mean, especially as we spoke about the regulatory struggles in South Africa, that how many more companies will get licensed. But I think the more competition, the better it is for the consumer, especially if we can deregulate the electricity landscape much more in South Africa. The private sector is very resilient, very entrepreneurial. There are so many projects in the pipeline at the moment that would deliver electricity in the next 18 to 24 months. I'm firmly of the opinion that in 5 years' time, Eskom will become irrelevant and it will be done mostly by the private sector.
Are you basically, seeing more and more privatization of South Africa, despite the ANC's desire to put itself at the center of absolutely everything? It's messed it up really, really badly. And so it can play politics at the center and it can look for votes at the center. But South Africa really is going to be more of a private sector run entity into the future.
I firmly believe that's the way we have to go. I think we've shown as the private sector of what we can achieve. I mean, if we just look at what has been done on the cell phone industry, if you compare it to the old telecom, by privatizing the mobile networks, and actually giving license to the private sector, look how it changed the landscape. So we actually skipped fixed lines in Africa and we went directly to mobile. So I think it should be done more and more. Unfortunately, we're not always seeing eye to eye with government on that, and that we need to close that, what I call the trust deficit, to show what we can contribute as the private sector. So clearly, there is no doubt if the private sector had concession on railway lines, on stations, on ports and terminals, we wouldn't have seen this mess that it was now. And we just need to convince government that we can do it better than the current operators. Luckily, there is some green shoots coming through. There is the concessions or RFIPs out for the Durban container terminal, the rail corridor between Gauteng and Durban. So we're starting to see slowly these things coming through, but it's slow. But we have to be realistic about that.
Yeah, unfortunately, incredibly slow and frustrating. Jannie Durand, thank you, Chief Executive at Remgro. Yeah, not sitting still, not for a moment. That Distell Heineken tie-up is really interesting. Beer, are we going to see beer wars in South Africa? AB InBev, of course, bought SAB Miller. It merged its operations worldwide. It had to sell off a whole bunch of assets that had been cultivated and collected up by SAB Miller over many years, but it's got SAB in South Africa. Are we going to see the tie-up between Heineken and Distell lead to the first real competition South Africa's seen in beer ever? SAB has had 90% market share of South African beer for generations. Is this going to be the tipping point? I wonder. I hope so. I think competition's a very good thing.
The Money Show with Bruce Whitfield was brought to you by Absa Corporate and Investment Banking. The bravery to imagine. That's Africanacity. Absa is a registered FSP.